What's up everybody, Investing Club here, back with another video. In this video, I'm going to be analyzing one of my favorite stocks in the stock market right now. It is a stock that I have talked about in a lot of my past videos, and it is one of the largest holdings in my stock portfolio. And the stock is Bank OZK, ticker symbol OZK. And in this video, I'm going to take you through why I think it is a good buy at the current price level that it is trading at. Now, this is not financial advice, and I am not a financial advisor, so you must do your own research before buying any stock. Don't buy the stock just because you watch this video. Now, let's get into the stock. Now, Bank OZK is a small regional bank. They started out in the southeastern United States. In Arkansas is where their headquarters are, and they've slowly been expanding. They have a few branches in Texas, California, and New York now, so they are expanding. Now, the thing I love most about this bank is their long-term record. They've had 41 consecutive years of positive net income, so they haven't lost money in 41 years. And in 19 of the past 21 years, their net income has increased. So this is a company with a long track record of increasing net income and growing earnings. The management team is also very experienced. As you can see, George Gleason, the CEO, has been CEO of this company for 41 years. So I love how experienced the management team is, and I love how they keep a long-term view when running the company, which is something I like as a shareholder. Now, this bank has outperformed virtually every other bank on return on average assets and return on equity. So the red lines are for Bank OZK, and the blue lines are for a group of other banks. Every year, OZK has earned higher returns on asset and equity. And I think this is one of this bank's competitive advantages. I always look for stocks with a strong competitive advantage. This bank has the ability to earn higher returns on equity and assets than other banks. And their net interest is their largest category of revenue, and their net interest margin is better over the industry average over the long term. So this bank's largest source of earnings is their interest, and they consistently earn a better net interest margin. So these are the things I love about this bank, their ability to outperform other banks. Now, in addition, this bank is one of the highest quality banks I have ever seen. Right now, we're taking a look at the net charge-off ratio. And what you can see is this Bank OZK has had a lower net charge-off ratio every single year than its competitors. The loans that this bank writes are of the highest quality, and that has been proven all the way back to 1997. The net charge-off ratios are very low compared to the average. And this is because of their high credit standards. This bank has some of the highest credit standards I've ever seen and will only lend to the very highest safety group of companies. Again, they have ranked as one of the most efficient banks since 2008. Their efficiency ratio is in the top decile of the industry. And here is a bubble chart of all of their real estate loans. This bank mainly deals with commercial real estate, which is a risk in today's environment, which I will cover. But as you can see, they have one substandard loan, which is on credit watch, which is a part of the reason why the price of the stock dropped in 2018, even though I think it is not really a big deal. A lot of people were spooked by it and sold out of the stock. But I use that as an opportunity to start buying because I do not think the price drop was reasonable. Again, this bank is very shareholder friendly and always takes actions that will result in maximizing value of the shareholder. You can see their tangible book value has grown at a carry average growth rate of 21.3% over the past 10 years. In case you didn't know, banks are usually valued based on tangible book value. And so this is a great sign to see essentially the valuation of this company grow by over 20% a year. They have increased their dividend each quarter for the past 38 quarters and every year since their IPO. So again, this is a company that places a high priority on their dividend, and they recently increased their dividend again. So I'm not saying that their dividend can't be cut in the future, but it seems like this company has the earnings to cover the dividend and have recently increased it again. When a lot of companies are cutting their dividends, this company is increasing it. So we can take a look at this bank's growth numbers, and as you can see, they're outstanding. Over the past 10 years, the book value and dividend have grown at 31% a year. Their earnings per share have grown at 30%. operating cash flow has grown, and sales. And while that growth has been slowing down over the past 10 years, and I think that is just because of the fact that we are at the end of the market cycle, and this company thrives during recessions, which I will get to. And in addition, this company has a modest level of debt and has high returns on equity and invested capital, which I went over. They are both higher than their peers. So taking a look at the stock price, in 2016, this bank was at $54, and currently they have fallen all the way to $20, and they were as low as $16 in the last couple of months. So what was the reason for this? Well, first was the one bad loan that they had to write off. They still have a very safe book of loans that they have written, and I think that they will get over the one bad loan, no problem. And the second reason is I think the growth has been slowing because we are at the end of the market cycle, and because this bank only lends with very strict credit standards. Right now, competitors of this bank are not going to be as strict, and therefore will get a lot of the potential customers. Right, if a company tries to go to Bank OZK for a loan and we say, sorry, we don't think your company is safe enough to lend the money to, then that company will just go to another bank who will gladly do it for them at this point in time. And that is why this bank always underperforms at the end of the market cycle and outperforms during recessions like we are in right now. This is a quote from the CEO during the last quarterly conference call, and he said, I think we'll get rewarded for maintaining credit discipline when economic conditions reach a point where guys who are being too aggressive get punished, for we think we'll be in a great position to shine and grow in a meaningful way at that point in time. And so looking at it this way, this global shutdown we've had is actually one of the best things that could have happened to Bank OZK. Why? Because it essentially reset the credit cycle. In the coming months, I expect we will see a lot of defaults, and that will drive this bank's competitors out of the real estate market where this bank does the majority of its loans. Once we are at the start of the new market cycle, this bank will thrive. So now we can get to the dividend. The dividend for this company is currently over 5%. And like I said, it's been growing. They just raised the dividend last quarter. So while that's no guarantee that they won't cut the dividend in the future, depending on how long this goes on, I would say the dividend looks safe. And as you can see, even though they're expecting a big drop in earnings this year, their earnings still cover the dividend, which puts them in a good position to not have to cut the dividend. We can take a look at the free cash flow, and even the free cash flow generated by this bank, even though there's no prediction for 2020, if it follows the trend that it has been doing, the free cash flow should cover the dividend. So in that case, this bank should have no problem paying back the dividend. Now we can take a look at the valuation of this bank and why I think it is attractive buy today. As you can see, the green line on this chart represents the earnings. And as you can see, from 2012 to around 2016, this bank was overvalued. It was trading at a PE as high as 26, which is way too high for a bank. But as you can see now, from the high to around now, this bank has dropped 61%. And so I think that makes this an attractive opportunity to buy this bank now. Right now, they're trading at a PE of under 8. If you went back to the last time they did that, it was probably around 2008. And you can see what happened after that time. A total annual return of 40% over the next 5 to 6 years. The earnings are expected to have a big down year, but then are expected to bounce back quickly. So I think this is a great opportunity to catch this bank at the end of the market cycle where it is poised for more growth coming out of this recession than it was having over the past few years. So this bank has traditionally been valued at around a 15 PE ratio, and we can go to the forecasting. And if we get back to that, at the end of 2022, this bank could be a $49 to $50 stock, which would be a total annual return of 40% per year. So I think this bank is a very attractive opportunity right now, and that is why it is one of the largest positions of my portfolio. Now, the main risk of this bank is that the loans are heavily concentrated into their real estate specialty group, which mainly consists of commercial real estate. And, a big risk of this company is, will the demand for commercial real estate be as big as it was in the past after this situation, after this global pandemic we are going through is over? And that is a real risk, and it is a real question if companies will want to spend as much as they did in the past on commercial real estate. And if we come out of this and a lot of companies don't want commercial real estate and start working from home like they have been over the past few months, then we could see a decline in demand for the services that this bank offers. I think that this bank is still in a good position. Even if we see a decline in demand for commercial real estate, this bank has been expanding into loans for things like RVs and boats. And honestly, I still think that there will always be a demand for commercial real estate, even with what we're going through right now. So yeah, that is my analysis for this bank. Let me know in the comments if you agree or disagree with anything I've said. And I am excited about this holding, and we will see how it performs in the future. All right, so be sure to leave a thumbs up on this video and subscribe if you haven't already for more videos like this where I analyze stocks that aren't covered well by anyone else. And I will see you on the next video.